Over the past couple of years, it became clear to us that more and more of institutional clients were telling us, look, we don't just have financial objectives. We actually want to think about a second issue, which is what's the impact of our portfolio on the world? As asset owners start to really putting that on the agenda, we said that really requires for us a fundamental rethink in how we think about portfolios. In our parlance, what we would say is you've really added a third dimension to your investment process. You're not just looking at return and risk. You now also want to evaluate along this third dimension of impact. And so we've spent the last, at least 5 years building out a deeply systematic sustainability assessment approach that enables us to really look at individual securities and also overall portfolios and be able to now evaluate each investment decision from both a financial perspective and a sustainability perspective. And then once you have that, then you can start the engineering part, which is how do you put portfolios together that then can, both beat markets while also investing in sustainable entities. We're building our entire sustainable investing platform on top of the Bridgewater platform. We could never do what we've done if it wasn't for the 40 years of accumulated knowledge, the whole tech platform of Bridgewater. But then you have to say, but what is missing? And how do we build something that is as rigorous, as systematic on top of that? And I think that's an important point for everyone, which is you have to put kind of the best talent and you have to do all the things you did on the two-dimensional side, you now have to do on the three-dimensional side. We believe that we can still create great risk-adjusted returns while also investing sustainably. That's the very short answer.
Yes.
Now, then, in a way, the response back might be, look, don't you remember in first year in math or in econ or finance, we talked about unconstrained optimization versus constrained optimization, and the notion that if you introduce one additional objective, there is a efficiency loss, so to speak. And
Yeah.
I think that mathematically is true. That if you suddenly are, if you're not willing to invest in very unsustainable things, yes, your investment universe does restrict a little bit. But this is where I think it's so important to not stay in the philosophical or in the theoretical, and in a way get down to reality and ask, in practice, how are we investing? The question is, do you have enough? I'm Danish. I like Lego. Do you have enough Lego pieces to build a well-diversified portfolio? And of course, if you're so constrained that you only have 4 blogs, that makes it hard. Yes. But we believe that that there are enough securities in a way to choose from to build great portfolios. And I think there's an importance here that the number of Lego blocks is not static, meaning it is true that more and more companies and the whole society is now more and more focused on sustainability. So the investment universe is expanding, both because you have more and more companies actually leaning into this, but you also have better and better data. I mean, what is wonderful, people always complain about bad data. That is true, that's not perfect data. But I think the question we should be flip it around and say is, based on what you know today, do you know enough to start evaluating these different Lego blocks and start to actually deploy capital in that direction? And we think the answer is yes. So maybe this so-called efficiency loss that may occur whenever you put in a constraint, like my hope is that, actually my belief is that they will shrink over time. I can't prove that, but that is, and I don't invest based on an assumption of that, but I do think that we will just see, literally, if you look in the last just year and you look at the specificity of plans, commitments, CapEx plans that a number of companies who are not that sustainable but are trying to convert to become sustainable that they've put forth, yes, it has been really impressive. The world is not going to switch to a sustainable future like at once. There will be a transition. That's an obvious point, but we sometimes, I think, maybe didn't pay enough attention to it. And what that means also for investors is the delicate question of saying, if you want to invest sustainably, you can, of course, identify companies that already are sustainable, either because they were born to be sustainable or they have already made the transition. Wonderful. You can also invest in a way, enablers, like the companies that we need. The whole world needs those companies to succeed because they will help the rest of us for example, decarbonize. That's also great.
Yes. Yes.
But let's be honest, there's a big group of companies that we also need to change. And they're the hardest ones because they are the companies that are unsustainable today. And we need them to become sustainable. And that raises a very interesting question for both investors in the world, which is how do we deal with this transition? Do we just stay away from it because we're like, no, because I'm not going to touch that because I want to be sustainable, like metals and mining.
Yes.
I know that my electrical vehicles need the copper. I know that the electrical grid needs that, but it's very dirty. I really don't want to touch that because I want to be sustainable. In a way, I think no. I think for me, the question is, let's try to visualize what a sustainable future looks like in 2030. We like to use the Sustainable Development Goals for that, and work backwards and say, okay, at the margin, what are the activities that we need to get to 2030? And so, for example, metals, to my mind, is a great example of something that we clearly need in 2030, but we also have to be honest and say it's not done so sustainably today. It's not done sustainably today. So how can we try to identify those players that are the most sustainable, engage with them, and just really try to thread the needle of saying we do need these things. Can we try to find, in a way, the ones that are the best position to take us to 2030? That's for me a very, very important and complex task that requires us to not look at the world in a black and white way. That requires us to take nuanced views and really wrestle with the true challenges of sustainability with all its trade-offs.